Welcome back. Still tuned into Power Breakfast on CNBC-TV18. Let's get you some updates on the earnings that we are tracking this morning. Came over the weekend. Coal India posted a mixed set of Q4 earnings. We have Nigel here with us with all the details. Nigel, what did the numbers look like?
Well, it was a mixed actually. Just to give you an example, your input costs are going up, but you're not getting those salary hikes, right? So that's precisely what's happened for Coal India. Out here, what was impressive, though, is their top line. So the top line was a bit of a beat out there. And that's because of the other operating income was up by close to around 9 to 10%, both on a sequential basis as well as on a year-on-year basis. The blended realizations, quite impressive out there for a company that's not yet got that FSA price increase. It was up by close to around 13%, came in at around 1,877 odd. Remember, some on the street were closer to around 1,830. So that's a 40-50 rupee beat in terms of a per ton cost. And that's because FSA prices, remember, they haven't yet come through, the price hikes, but yet the FSA realizations per ton have gone up by close to around 5%. Telling you that the mix is improving. They're selling more amount of this FSA sales to the non-power segment, which gives them a little better, realizations out there. E-auctions, on expected lines, volumes are lower, but those prices remain elevated. But that's going to be a challenge going ahead because we know global coal prices have cooled off big time. The reason for the EBITDA miss, both on the absolute number as well as the margin miss, is because employee costs surged up. And that was up to around 17,000 crores odd. 5,900 crores were on the back of a wage provision for wage revision. Now, we need to see the trajectory going ahead because that clearly hurt the margin picture. That's what resulted in a profitability miss as well. Coal India, they're already declared close to around 20 rupees 50 paise earlier as dividend. Now, they've added on another 4 rupees, so that's good. And the key trigger, though, for the stock from here on is going to be, can we hear about that FSA price increase? If that's the case, it'll be good because input costs have gone up. But the FSA prices, which is 85% of their volumes, haven't really gone up. So expect the stock to open up a little bit on the red, but I expect a bit of a recovery because most of the street will treat it as a bit of a one-off. Back to you.
Okay, take that point, Nigel. Thank you so much for explaining what really went ahead with Coal India this time.